So what we're best doing, I'll just go through the slides and do a bit of back testing as well. But yeah, at the end, if you've got any questions, just write them in this chat, and I'll go through them at the end and stuff. Okay, up. So yeah, just write any questions as we go, and we can make sure we cover them. So yeah, testing concepts, so back testing in a nutshell. So why do we need to back test? Well, we need to verify we have an edge, and what this is going to do is it's going to help us gain confidence. It's the foundation, when you know your stats. So if you hit a losing streak, say 4 in a row, but you back tested it and it's perfectly normal, and you see this when you go live, you're going to have a bit more confidence going forward because you know it's part of the system. You're going to expect these losses. So it's going to give you confidence. It's going to help you find any mistakes before you go live. It's going to activate the RAS, which is a reticular activating system, just basically being able to spot the patterns better. So you're practicing. Just like an airline pilot, they have to do hundreds of hours of simulated testing, flight testing. And it's kind of the same with what we're doing. We're just practicing. Understand your win rate and risk to reward in relation, and your drawdowns as well. So these are all very important. So the mechanics of a strategy. So what this basically means is you need these 4 conditions for your strategy. So you need your main conditions that you need to see. You need an entry trigger. You need to know where you're going to put your stops, and you're going to need to know how you're going to do your trade management. So that's the basic foundation of a strategy. When you have them 4 requirements, that's when you can start testing them. Okay, so for conditions, this might be you need to be in a trend, so you need to see like the EMAs aligned, something like that. You need to see a pullback to the EMA. That could be the main conditions. Okay, and the entry could be I need to see a trigger candle, maybe like an engulfing. Stops could be I put it above or below the high or previous structure. Targets might be fixed 2R. Okay, so that's your basic test template. So you start going through that. Some good platforms to use are FX Replay. I think that's the number one right now. Forex Tester is pretty good. That was one of my favourites, but Forex Replays took over now. I'll put a link actually to the FX Replay and give it for everyone. Just bear with me. I remember it. Try and find. I'll do that at the end anyway. It's fine. So yeah, we'll go over Forex Replay today, and TradingView is a good one. You just don't get as much data, especially if you're using the lower time frames. If you swing trading, you'll get plenty of data on that. You can manually do it. So we'll do a bit of TradingView and a bit of Forex Replay, show you how they work, also using that spreadsheet that I put in the chat. So breakdown of the basic metrics we need. We need to be making sure we put in what pair we're trading, the dates, the win-loss, total gain. So these are the 3 most important metrics: win rate, risk to reward, max drawdown. So yeah, you need to know what your win rate is. So if it's like a 50% win rate, you're going to lose half of your trades. Your risk to reward, you need to make sure your risk to reward is in relation to your win rate is right. So if you're going for a 2-to-1 and your win rate's a 50%, you're going to be all right in the long run. And max drawdown is you need to know what is your max drawdown. So here's how the win rate the win rate relates to the risk to reward. So if you go for that 2-to-1, you're still going to be in profit if you have a 40% win rate. If you go for a 1-to-1, you're going to break even if you've got a 50% win rate. But if you're anything over that, you're going to have profit. A 3-to-1, you can have a 30% win rate and still be all right in the long run. So this is why risk to reward and win rate are important to know. And some other things here. So here's your probability of losses in a 100 trade sequence. So if you've got a 50% win rate, you've got 100% chance of losing 4 in a row, and then 95% of 5. Let's go more down. So even a 9% chance of 10 in a row. So knowing that stat alone can help you, keep going through the drawdowns. Where the newer trader who's just starting with a system, they don't know the stats. Say they get 10 losses in a row, 9 losses. Sorry, 10 losses in a row, something like that. They're not going to be able to stick with it. You know what I mean? So that's why it's important to know your stats. And, so yeah, this is the spreadsheet that I put in the chat. I'll show you how to use that in a minute. That's Forex Tester. So what should you be backtesting? I'd say at least 2 years of data, 1 to 2 years of data per market. Around 100 trades is ideal. And the reason for that is you're letting the probabilities play out. So if you don't understand what the probabilities are, the law of large numbers, you need to go check this out. I've also wrote a bit about this in my book, if you've got that. But basically, the larger the sample size, the more the edge plays out. So if you take 10 trades, that'll be completely random. If you take 100 trades, that's when the edge starts to work. So if I say you've got a 50% win rate, out of 100 trades, you're going to win 50% of them on average and lose 50%. That doesn't mean if you take 10 trades, you're going to lose 5 and win 5. It's too short term. You need a large sample size. So make sure you backtest exactly like you would live. This is important. So if you're trading like the New York session, make sure you're testing that, not London and New York and Asia. Just test the sessions that you would trade. So it gives you a more realistic look. So I won't go into optimization. That's a bit more advanced. But yeah, that's the basic concept of why we should backtest and what stats. I'll just bring over the spreadsheet. So here's the spreadsheet. So how I like to do this one is I like to just write in its percent or so it does say dollar here, so you can put the dollar amount and it will work it out. But what I like to do is just make it easy. So let's just say I'm going from a 1 to 2. So every time I win, I lose 2. Every time I lose 1. So if I lose 1, I just put in -1. Let me on. Why is it not letting me edit it? Just having a bit of trouble with this. Just bring up another one. Let's try this one. Okay, so this isn't as clear. Done a little bit of editing here, but yeah, you just write in -1, and then if you win your next one 2, maybe you win the next 3 in a row or something like that. And it just calculates it at the top here. So it's saying what my win rate is, 75%, total gain so far 5%, and max drawdown 1%. So you just enter your trades in like that manually. This is a good way of doing it quickly, and it will just calculate everything for you. Like so. So you can get the main stats that we want to know. So I'll bring up FX replay now. So this is a really good one. What you can do, let's just say trade in the 15-minute. We're looking for the MW. Let's put on the Bollinger Band. Okay. Let's say we're looking at this here. What we can do, enter the trade. Oops. So we're going long. Stops maybe go below. Targeting the high. What you can do with this is just put your risk to reward tool on and press save, and it does it for you. And then you can play it out. So that would have been a loss. And then at the end, it gives you a load of stats. Let's have a look at this one so far. So with this, you can see that Fridays tend to be a bad day. Gives you monthly returns. So it's a good way. I'm just getting all the stats in one place before it's replaying. It's really easy to backtest. Now, if you manually want to do it, let's say we're testing Euro USD, you could do it on TradingView as well. Just go back in time. So let's say we're going to 2020. Let's do it on the hour. So it does only go back so far, but it does actually give you a bit of extra data. If you just keep going back, you can get it about 3 or 4 times before it runs out. So anyway, we'll do it from here. Turn off. Okay, so let's just have a look for some setups. So let's just should we go for? So you can just play it out. You can change the speed on TradingView. You can make it go fast, slow, whatever one you want. Okay, so let's just say we ended up here. Somewhere there. You're targeting the low. So now you've won 2.64. You can go to your backtesting spreadsheet and type it in. So let's just go back and type in 2.64. You can just do it manually like that as you go through everything. So it takes a bit of time, but you know, this is what's going to give you the confidence. So let's say we enter it over here, came outside the Bollinger, say you target in there, see if this one would have worked or not. Okay, so that's a loss. And then you go back to your backtesting spreadsheet, type in -1. And then you can get a large sample size of trades and then know your data. So yeah, that's basically how you backtest. It's pretty simple stuff. The main stats you want to know are your win rate, your total gain, and your drawdown. Once you know them, that's the foundation built. So yeah, any questions, anyone, on backtesting? You can do a few live testing if you want to test some out. Yes, can we backtest any time of the day? I'm not sure what you mean. You can backtest whenever you want. Do you mean for your strategy? What strategy do you use? So I use a few, but the main one is MWs and triple divergences. So divergence in a nutshell. So what I ideally look for is a divergence coming outside the Bollinger Band. So something like this. So I look for the first peak to go oversold, the second one to create the divergence, rejecting the Bollinger Band, and then I like to go down to the 1 minute, but I can't actually do it on this because I'm on the hourly. But yeah, then I look for confirmation. Oh yeah, no problem. You're very welcome. I'm glad this session has helped. But yeah, I'll show you a bit of the strategy that I trade. We'll try it on Euro USD right here. There's a free. We'll go through the mechanical one if you'd like. That's we've got a free PDF of that in the free resources section. How many trades should we backtest per day? It's up to you. As many as you can. You know, maybe just dedicate an hour to backtesting. Just get as many as you can. If you do an hour a day, you'll be fine. But yeah, the more back testing, the better. So, in the slides, I said 100 trades is ideal. Um, but but do the amount that's going to give you confidence. What's the number? It might be 200, 300, 400, 500 trades. Whatever's going to give you that confidence is important. And what ideally you want to do, if you can, is go back 10 years. 10 years of data. So you're seeing all the different market environments. So you're seeing like the outlier events like COVID and stuff like that. These black swan events, and seeing how the strategy would have performed during then. So I think that's important if you can do that. But it's harder with the lower time frames. Can you backtest 100 trades and what? It can be done, yeah? Yeah, it can do. Uh, but yeah, you'll need a bit of time to do it. It depends on the strategy as well and how much work um, goes into it. If it's like the mechanical MW, you could probably do that pretty quick. So I just want to do backtesting. So yeah, like I just said. So yeah, the basic premise of it is, we look for RSI to go oversold, and then we wait for a second peak higher, creating an MW share, and goes outside the Bollinger Band. So you'll see these all over. And what I like to do, so here's one there. There's divergence. Yeah, exactly. Exactly, that's right. So you're documenting the results of what would have happened if we took the trade based on the trade style we're using. Yeah, that's exactly it, Dan, right? I don't know if I'm saying that, day nine. So yeah, if I'm testing the mechanical one, so we look for the high and a higher high to come outside the Bollinger Band, first peak up to go oversold on the RSI, and then we enter with um, either a 1 or 1.5 stop loss, so I'll call that 6 pips, target 1.5. Okay, so that's the first trade hit. So I'll just be going on my spreadsheet now and put in 1.5. So this is what I like about the mechanical MW. It's just really easy to test. You can see it happen over and over. So we've got not a clean one, this is more triple divergence. So that would have been an entry there. Let's have a look. So about 7 pips. Looks like this one would have been a stop out if it didn't go to 1.5. So it went to 1 or just missed 1.5, but then you get another entry here. That one hit. So we had a loss and then a win. So I'll just do a few live ones. I heard that Trading View Tester is for paid. That's right. Yeah. Do you recommend any free software? The only free one I recommend is TradingView. Um, that's probably the only one I'd say. But if you really want to just level up on your back testing, Forex Replay is really good. I think they do a free trial, like five days, something like that. Um, I try and find the links. There we go. There you go. On the link section. So I'll just put it in the chat in a minute. Yeah, just check if it's still doing the free trial. So let's have a look for another MW setup. So I only want to be looking at certain sessions that I'd be trading. So I won't be trading, um, what's it called, Asia. So I'll just turn that off for now. So I just want to be looking for setups maybe in the green or the red. Okay, so here's one now. So I've got a first peak RSI, second one comes out the Bollinger. Let me change the settings. I usually use 2.5 for the mechanical. So does sort of come out here. So yeah, what I usually look for with the mechanical, once I've got that, ideally I look to the left and see if there's any liquidity taken. If there is, then I go down to a lower time frame and I look for triple divergence. Once I've got that, then I enter. So it's the micros lining up with the macro. But if you just want a simple approach, this is a good way of doing it. So that would have been loss. Go through a few more. So yeah, so the first signal we look for is the RSI to go oversold or overbought. Once you've got that, you can then look for the FW. So there's a bit of liquidity to let's look to the left. So I'd look for this to be taken first, ideally. We don't get a rejection outside the Bollinger Band on that one. So this kind of is one, but it's on a news day. So here's one that's to the left, there's only liquidity taken. So there is a bit of liquidity there, just taken minor liquidity. What's good about this is I know all this has been taken as well down here. So with this, we have the divergence. So we've got the first RSI overbought, sorry, comes back up outside the Bollinger Band and takes out that liquidity. And we've got divergence. So that would have been a good entry. So that's a 1.5. Put that in. So you can see in the beginning, it can be a bit random. But then once you start seeing like 30, 40, 50 trades, you'll start seeing the odds play out. And that's what the probabilities are. So did that come outside Bollinger? No. But yeah, anyone who wants this strategy, it's on the free resources section. I don't go into I just show you the plain mechanical system. So there is one here, but it's on news. But I like how it's took this liquidity out here. I do prefer cleaner on W's. There is one here. I want to say that. So this is looking a bit better. So you've got a RSI oversold, second peak here. And then you want to look left really to see if anything's been taken out. So just turn off these Bollinger Bands, make it a bit more clear. So you can see there's that liquidity point there. Plus with that, so it's like relatively equal highs. Let's see where the rejection would have been on this. So with the mechanical one as well, like I said, there is a signal here. It's a big candle though. Let's just see with a 1.5, it's a bit too small. So you're talking about a 7 pip. So you might have got stopped out. So yeah, with the mechanical, I advise having a bit of a bigger stop because you haven't got any lower time frame confirmation. If I was looking at this, I'd go down to like the 1 minute and start looking for a triple divergence forming. So it's basically price will be doing that, but on the RSI, it'll be doing the opposite. It'll be going down. And then you can look for a break of structure. Also with backtesting, what it will help with is you use it to optimize. So this is another bit I've not really been over, but optimize to the best market. So not every market is the same. They're not your strategy isn't going to work well on all the markets. Some work better than others. So if you optimize for the best markets, let's say Euro Pound works really, really well, but Euro USD doesn't. Okay, so you only look to trade Euro Pound. You know, that gives a better win rate, better return. You know, so it helps you avoid trading the bad markets. So you might have a good strategy, but it doesn't work well on a certain market. So the testing, you can filter all that out. So it's important to do. Let's go through a few more tests. So let's look for a clean MW video. Right. Does that take out liquidity? Yeah, just. So you've got a high and then a higher high, only just, but it creates the divergence here. Like I said, with a mechanical, you want a bit more of a bigger stop. Let's just make it 2 ATR. So it's 10, 10.5, something like that. And that easy hits 1.5. So the win rate's going up a little bit now. Let's go through a few more. Let's try and find the RSI oversold. So that was nearly a good one. So we had the RSI oversold, we had the second peak, created divergence, but it just didn't reject the Bollinger Band. So this is looking like a good one. Liquidity take on. So you have a high and a high there. Looks like it might have been a news event, this one. Let's try see what this one would have been. So about 20 put. So 2 ATR stop loss. So yeah, has a bit of drawdown. So if we're going for a 1R, you hit that. You could maybe move. So this is where you can come up with ideas as well. So you know you're going for 1.5 and you're seeing it hit 1R a lot. Okay. So that's what backtesting is going to do. You're going to start to spot patterns. So I know if it's going to 1R a lot, but then reversing, okay, we can make 1R a rule where we move it to break even. Okay. And then that way we're reducing the drawdown. Remember then that main stat, win rate, drawdown, gain. So we need to optimize them. So how can we reduce the drawdown? Okay, we can move it to break even in 1R and then let it run to 1.5. That's going to reduce the drawdowns and increase the win rate, increase the return. Okay, so yeah, I'll just do one more. Just have a look at one. Okay, so there's one here. Let's have a bit out of section one. Yeah, you've got your RSI oversold. Second peak closes lower, comes outside the Bollinger. So, 12 pips for 2 ATR. And it easily hits 1.5 and then the tight line. There you go. So let's just have a look at what the stats are saying so far. So 75%, 7% gain, 1% drawdown. Now, what can happen is in the beginning, you'll be doing some tests and they'll all be like this. There'll be loads of losses, maybe the odd win. Oops. -1, you win one, you lose another 3. Okay, but what this is, it's just random. This is random. So a 5 trade sample size isn't enough to confirm whether you have or you haven't got an edge. It's when you're going to get all the way down here, to like your 70th trade. That's when you start seeing the edge play out. I'll try and find a little backtest I've done on something. Let's have a look. Got a lot of messy ones, so I'm trying to bring up a clean one. Let's see how this one was doing. Okay. Let me just go through a random bit. Okay, so here's like a not so good period. Having some losses, a win, and then another 2 losses. Okay, and if you look down here, it says -3.5, but you've only took 6 trades. Okay, let's spread it out and get a large sample size now. Okay, so we've done 93 trades. The 93, it's now gone up to 25%. So that's showing the probabilities playing out. Let's have a look here. So this here, this little bad streak of 8 trades is -4%. So you're probably just thinking, oh, this strategy doesn't work. What's the point? And that's what most traders are doing. They're thinking, oh, I'm down 4% after 8 trades. What this strategy doesn't work, and they move on to the next one. Okay, but let's stretch this out now. Let's get a large sample size. Okay, let's go to 20 trades. Okay, 20 trades. It's not great. 1%. Okay, let's stretch it out even more. Let's get to a 100 trade sample size now. So let's go down. Oh, there we go. 100 trades. Okay, now we're at 24%. So that little losing streak, even here, if you'd have started the strategy here when you go live, after 8 trades you're down 5%, you'd be thinking, oh no, it doesn't work. But if you tested your data and you've noticed that you have, a losing streak like this, you're going to think, okay, this is normal. I can do this. I'm just going to get to that 100 trade sample size and let it play out. So even after 50 trades, 50 trades is a good little marker as well. So you can see after 55 trades, we've made 10% down here. So yeah, that's why you need to let the trade play out, and that's why it's important to manage risk as well. So I hope that makes sense, everyone. So any other questions before we finish? Did everyone enjoy it? Yeah, simple. Yeah, glad it helps. Real glad to hear it, Ed. So yeah, thanks for joining me. If no one's got any other questions, I'm going to close down. But if you do have any other questions, just hit me on the Discord, and I'll get back to you. But yeah, happy back testing, everyone. And I'll see you soon. Okay, take care.